Hi, I'm Julie Safarenko, a certified educator and credit counselor at American Consumer Credit Counseling. Today we're going to talk about the information that's on your credit report and how it affects your credit score. Many people today are financing their homes, their cars, and their college educations with loans. Many of us also use credit cards to make purchases like vacations, furniture, shoes, and even coffee. Now, we can't always expect to receive the credit we need or at the interest rate that we want it for. Our bankers don't know us anymore, and so the way that they're going to make a determination of how much credit they'll give us is by looking at our credit report. And that's what makes it so important for us to also know what's on our credit report. So today, I'm going to walk through the report with you, and then I'll show you what to do if you find any errors. First, you need to visit annualcreditreport.com to receive your report. You can get one free credit report from each of the credit reporting agencies each year. Before diving into the different sections of your report, it's important you know that your credit score is not free and you'll need to pay for it. You do not need your credit score unless you're applying for credit in the next 3 to 6 months. FICO scores generally range from 300 to 850, and the higher the score, the better off you are. Now we're going to get into the specifics of your report. The first section we're going to talk about is inquiries. Inquiries are 10% of your credit score. They stay on your report for up to 2 years. There are two different kinds of inquiries: hard inquiries and soft inquiries. Hard inquiries are what I like to call applying for more money. So whether you're applying for a credit card or a car loan, that will count as a hard inquiry. It'll go on your report for up to 2 years, and so you want to keep an eye on those. It also counts as a hard inquiry when you ask for a raise in your credit card limit, when you apply for a new cell phone, or even when a collections company looks at your report. Now, a soft inquiry is what I like to call informational. Somebody is looking at your report specifically to see what information is on there. So when you look at your own report, that's a soft inquiry. It's never ever going to hurt your credit score, and creditors aren't even going to see that you've looked at it. Amounts owed is 30% of your credit score, so it's one of the most important factors in determining what that score is. Now, amounts owed particularly pertains to the credit cards and your revolving credit lines. Installment loans, such as car loans or student loans, they're taken into account a little bit, but you really want to keep an eye on your balance of the credit card compared to what your limit is. Now, the golden number to keep in mind with balance to limit is 20%. So for example, if your limit is $5,000 and your balance is $1,000, then your limit to balance ratio is 20. And if you keep your balance at or below 20%, this is going to keep your score healthy. Payment history is the next section that we're going to talk about. This is 35% of your credit score. The most important thing to remember is that if you pay your credit bills on time, then this part of the score is going to be perfect. If you have a late payment, that's going to pull down your score. This takes into account how late a payment is, how many accounts you're late on, and how many times you're late on a specific account. These late payments stay on your report for up to 7 years, and it's good to know that when you pay on time today, it counts more towards your credit score than if you paid late in the past. Length of history is how long the credit report shows that you've had credit for. This contributes to 15% of your credit score. A creditor wants to see a history that really gives them an in-depth feel of how well you pay back your credit accounts. So the longer your history, the better. The most important thing that you can remember for length of history is if you're looking to close a credit card, try to close cards that are more recent. As long as your oldest cards have no annual fee, low interest rate, and you like the customer service people, try to keep that card open and close cards that are more recent. The last section of the credit report is the mix of credit. This is 10% of the score. A mix of credit shows that you can manage different types of credit situations. For example, if you have a mortgage and a credit card, you're showing a mix of credit. For this piece of the credit score, know that it really doesn't hurt your score if you don't have a mix of credit. It can just push it up a little bit higher if you do have that mix of credit. To make sure that your credit score is accurate, you should dispute any incorrect or negative information that you find on your report. To do this, you should either send a dispute letter directly to the credit agency or file a dispute electronically on their website. For more information, visit us at consumercredit.com or call 866-464-5142.